You know what I did, Daryl?
What did you do, TK?
Well, I sent our guest that thoughtful email to say, hey, guess what? We'll bring you in a few minutes late. But I said 11:05 or 11:10, thinking we were starting at 11, but it starts at 10:30. So I
Think
just
he'll
emailed him
figure it
now.
out. Maybe he's like most agents and he only paid attention to the parts that he wanted to
The
pay
subject,
attention
the subject of the
to.
email.
Did you see the
Oh, see what?
article in the Toronto Star? You got like the editor in chief writing a piece saying like how shocked he was at how the real estate market is. Like he tried to buy a house himself and he's all shocked at how tough it is to buy a house in Toronto. And
Yeah.
I'm like, well, have you read like even any of the headlines in your own newspaper? Like, how
Yeah.
can you be surprised by this?
Yeah.
Well, what a wonderful segue into TK. What the hell's going on out there?
I'm
Oh,
hoping that
and
our guest, I'm hoping that our guest today has got it figured out, right? Because there is so much. Like I'm looking at, the Vancouver market slipping. I'm hearing that, things are starting to crack over in the Calgary markets. I know that the New Brunswick market is not
oh,
as
that's
hot as it
weird.
once was.
I thought I heard that Calgary was like booming right now.
It's booming, but there's
It's
still a
weird.
lot more inventory coming up than it was a month ago, right? So then they're now starting to see like this little like, oh wow, there's more houses for sale. It's not just the scarce, undersupply like they had before. Quebec is starting to show signs of a slowdown big time, right? Some of the numbers there were coming back, like prices were coming down from January. And then, good old Toronto, right? We know
Yeah, I
exactly
have
what's going on
something
there.
here in Toronto that I wanted to put up. I was going to wait, but while we're talking about it,
The Toronto media dominates the scene.
our buddy here, Jordan Skrinko, put up some statistics from, I guess, the peak in February, which is what everybody's interested in, to, I
Mm-hmm.
guess, a couple of days ago, or maybe it was yesterday in April. And prices are off. Prices are coming off. There's no
Dun,
doubt
dun,
about that.
dun.
Oh my God.
It's 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 gonna be just like 1990, bro.
It's gonna be like the end of the world, man. And then I'm gonna swoop
Ah!
in and I'm gonna steal all your houses,
It's gonna
man.
be it's gonna be like everyone's gonna be just like giving away their houses for half the price that they were getting before.
You're gonna
Oh my
have to, man,
gosh.
because there's gonna be carnage and blood in the
Oh
streets and everything's
no.
coming to an end. We've been accused of being pumpers. That
Pumpers?
we're very bullish and that we're pumping the real estate market. And I mean, obviously we have that power. We're extraordinarily
Clearly.
influential fellows.
Clearly. I know that people come here just to decide on what decision they're gonna make. Do they go in 20,000 over asking or 100,000 over asking? What do Daryl and TK think?
But here's the thing. So I'm a very sensitive guy, and when somebody says something like this, I have to go back and check the videos. We have actual recordings here to prove what we've been talking about. I don't I remember very specifically many times being like TK, I feel
Mm-hmm.
scared. Like I'm nervous about this market. Something's going on. Right. Right.
Yep.
And the
And I've
evidence
been
was
talking
not
about it.
there. No, but the evidence wasn't even there. I mean, we talked about Evergrande like 6, 7 months ago. And
Mm-hmm.
I remember saying, like, is this gonna be like the Lehman Brothers moment? Like this is
This
major
is
stuff.
this is the
It was
only
a
thing I
tipping
know for
point,
sure.
man.
There's only one thing that I know for sure. Nothing lasts forever. That is 100% true. Okay.
Well, I
So
can
everyone's
guarantee
going to
you.
have their theories about what's going to happen next. Everyone's going to have their theories on where we're going and what we're heading into right now. Okay. But yes, eventually it will be a buyer's market in Toronto, in Canada, in Quebec, in anywhere. this is what happens. Markets change.
How long is it going to last? How long is it going to
That's the
last?
things that nobody really knows. And if you look at long-term real estate, if you look at where things are going and why you're buying, and if anybody's ever bought a property because they thought that they were going to flip it 3 months later for more because the market was going up, I can't help you. Okay. I don't know why you did that. I don't know what book you read it in. I don't know where, because I've heard from all the experts and all the realtors who actually care about their clients. Nobody gives that advice. So why did you do it? Right?
Nobody's out there saying buy this thing and flip it in a few months for a couple $100,000 more. I see evidence.
A reputable person. No, somebody who actually understands.
How can you have 70,000 reputable realtors floating around?
We don't, but we had Skrinko. Look, we had Skrinko on, who's a pre-con guy. When I asked him all the tough questions about how he's pitching this to people and what their expectations are, and he's very clear with them about what their expectations should be on the assignment, on closing, on all those type of things. I know how I talk to any investor. I definitely know how I talk to end users. End users should be the easiest person ever to talk to. Do you plan on moving again in the next year or two? Because if you do, most likely over the last 25 years, you lose money because of all the taxes and fees. So like, this is not an investment if you plan on moving 1 or 2 years from now. But if you're like 5, 10 years, so far over the last 100 years of data, you're going to be okay. Right. So like, that's the right advice. Right. But anyways, let's pump the shit out of it, Darryl.
Well, but I think the point is that I don't think we're pumpers. I think we're positive. We definitely both have a vested interest in the market. Well, actually, do we both have a vested interest in the market going up? I mean,
I work on both sides and I help people do both things. So yeah, sure. It's nice to have a stable market. I hated the market in January, February, and March. I hated it.
What about the year before that?
I hated 2017 the way it was. Those markets were actually, in comparison, more stable. Our guest should be on soon, by the way.
Yeah, he's here. He's waiting.
A couple more minutes. And so like this week I sold a property, and it was in Scarborough, and it was the property that we talked about before. And it was, properties, again, this is how inconsistent things are. I listed the property for $1 million. We were going to list it at 1.1. We changed our strategy because places were out there sitting at $1 million. There was one place that was sitting at $1 million offers anytime. And we said, we can't go on at this higher price point. Even though we were a bungalow, we had a good lot, but no upgrades whatsoever. The prices in February were about 1.3 to 1.35, renovated totally. So it would make sense that $1.1 million, $1.150 in February or March would be a good price for this home, early March. So
it makes sense that would be a good price to start the bidding at, or to sell the house
value of the property with no upgrades.
It went down that much.
50 years.
$200,000.
1.1 to 1.150. Darryl, let me finish the story.
Oh, you said it would have sold for 1.3.
No, totally renovated. 200 grand in rentals. Okay. Yeah, it's okay. It's okay. Right, so when we listed the property for $1 million, 6 other properties came up. One guy undercut us at 950, 990, 999. Renovated properties, like 6 different properties, all in this Kennedy and Lawrence northwest corner in this Dorset Park area. It's very like typical type of houses, right? There's very few models, and it's one area. So I was like, damn. So we got a good amount of showings. We brought in enough activity. We sold it for $1,051,000 with 2 offers. My clients were really happy. Like the last note here, they were happy.
How much did you sell it for?
$1,051,000. So a little bit less than they would have got in February or March, but we got 50 grand more than what everyone else was asking. And there was one sitting on the market for 2 weeks, offers anytime. It wasn't selling. So, they were very happy. Anyways, why they were happy? Then let's bring on our guest, because they never looked up the value of their home for the last 50 years that they've lived in it. They just lived in it. And when it came time to sell,
$1,050,000. What the fuck is this? Quick, Henry, take it.
They accepted the best offer they could, and they were so happy. The price they got, they were through the moon. The fact that they got the closing they want, it was astonishing. It was like a happy moment for them in the Canadian real estate market.
But you mean to tell me that everybody isn't just glued to every single real estate podcast and article on the planet?
Unhappiest people in the world, the unhappiest people in the market are the ones who follow the market too much. I've lived by that for like 10 years, man. Everybody I know who's happy are the ones not watching their neighbors' prices. They're the ones who buy and sell when they need to.
Miserable, TK. Miserable.
I'm telling you.
Here we go. Well, while we are waiting for our guests to come in, this is the perfect time to subscribe, like, make a comment. Tell us if you like our hair. There he is. Welcome.
Hey guys, how's it going?
How are you?
Good. Welcome to the show.
Thanks for doing this. Thanks
for having me on, guys. Appreciate it.
Sorry
we checked you out a while back. Yeah, we checked out. It's okay. Zen's on the ball. We checked out you a while back, Zen, when we were first starting, right? And we were always kind of like, that guy knows what he's doing, right? He's got really good thumbnails and, a lot of views, and you've been doing it a long time. So, to me, you're up there in the professional YouTuber real estate space. So we're really happy to have you on.
Yeah, I appreciate it, man. Appreciate the kind words. You guys are doing pretty well. I checked you guys out too. You guys have come a long way. I'm glad you guys have
come a long way.
We've come a long way, baby. Look at us. Look at this. We got almost real backgrounds now.
I think you know the path though, right, Zen? I think you know like what it's like, right? Like you got to start somewhere and you build and you learn and you get better, right?
Yeah, definitely. And you know what it is? It's one of those things where like you have to find a reason to do it. There's a lot of agents out there who are trying to ask me like, hey, how much business do you get from YouTube and how much time do you do it? I'm like, well, I only started this because I don't want to keep saying the same thing to the same clients over and over again. So I'm like, here, just watch this for 10 minutes and then we'll talk afterwards.
Yep.
That makes sense. See, that's a good idea. When did you start this? Here's your channel up on the screen.
Thanks.
Yeah. Prime Properties.
Started in 2017. Right. It's kind of like a joke, but then actually one of my buddies told me to start it and I kind of got the inspiration from him. And then when we did it, it was over time. We're just like, oh, let's just send that message for clients to watch over and over again. And then at some point, I kind of got fed up with all the shenanigans that was at pre-con, and I kept have to defend against kind of the philosophy for investing. And then I just continued doing it that way. And then I'm like, oh, you know what? Maybe I should just put out better information out there because there's a lot of bad information out there in terms of real estate.
Oh yeah.
If we know all about that, you're at the end of the day, I'll stop, pumping you up here after this, but not only do you make good YouTube videos, because that's obviously important. We're still working on that, Darryl. That's okay. We're getting better.
Well, look at your set behind you guys. It's professional.
It's amazing. That's right. We're in a really Bay Street studio here.
TK worked very hard on that, I must say.
I did nothing. But your content's really good. So you're very informative. It's like real world stuff that a good agent should know, but people haven't cataloged like you have. So I feel like you've got a really good catalog of information for your clients or for anybody else just wanting to get information about everything about real estate. So that's I think it's very valuable. I think that's actually got value to it, to be honest with you, not just for your client's perspective, but just like for your overall business.
For sure, man. I appreciate that. Likewise.
Well, but what's the answer? How are you getting any business from it? Does it help with the business?
It helps. You know what it helps with? It helps with. I would say it helps with authenticity and creating a better relationship to start. So people aren't kind of questioning like me as a salesperson. I'm more like value content driven first, as opposed to kind of like cold calling. So it helps in that manner. For sure. Yeah.
Now we brought you on today because all the other guests we've had on the show, they don't know what they're talking about. And I know you are going to tell it. You have got the Canadian real estate market figured out. You know exactly what's about to happen.
I thought he was going to have his crystal ball on the desk in front of him.
We're confused.
So we could see it.
My crystal ball is just a prop. It's just a prop. It's a post prop.
So, I mean, the big word that's being thrown around these days, let me just throw it up on the screen here. It starts with an R. The Fed is tightening, and that usually means recession, no matter what they say. Does anybody even believe them anymore? Have we figured out who they are? We know we don't trust them for sure, but who are they? Why are they doing this to us?
It's just a bunch of guys with suits in the background controlling propaganda. I mean, it is interesting that you bring this up because I was, before I was going to chat with you guys, I was putting up Nick's video together talking about kind of the outlook of where I think things are going to go. And then I saw that article. I was like, oh, here we go. Recession, first Q1. I'm like, here we go. I don't know how they're going to increase rates as they're going up into it, right? So for anyone who's listening or watching, like, a recession is basically 2 quarters of negative GDP growth. They projected 1.1 increase, and now it's minus 1.4. So it's like kind of like 2 years
In the
ago.
States.
Yeah, in the States.
Yeah.
And then there's like CMHC saying, hey, prices will drop 30%. They swing by 50. So now their projections are wrong. And now it's going to be one of the few times in history that they're hiking rates into a potential recession, because we're 1 quarter in. That means we're halfway through a recession. I can't see how we're going to have, well, I mean, there's possibilities, but like the chances of an actual recession is probably really high because we haven't felt the effects of like the war out east yet, right? Like those numbers aren't in yet. So I think we're in for a recession. So it's going to be weird. But it's one of those things where like Canada, everyone thinks, as a person who lives in Toronto, we think we're the center of the world, like you live in Toronto, you're talking to other people in Canada, like where, right? Like we just think we're for the, I don't want to use that word, I don't swear on this, but like, we think we're the poo-poo, right? Or like the shit. At this point, it's just like, well,
hold on, get it out of your system now. Shit. Piss.
I try not to swear. I don't want to demonetize you guys.
We're not making that much.
We don't care.
It's not a big loss.
All right. So like if people in Toronto think they're shit, like, Canada's GDP is the equivalent of like California's. So like we take instructions from the Fed. So if the Feds are going to be, dropping rates at some point, we will probably too as well.
Dropping rates. So meaning if the US heads into a recession and they end up raising the rates to the point where their economy starts to contract, they're going to have no choice but to either pause on the rate hikes or lower them back down in the future. And that's going to cause the Canadian government or Bank of Canada to follow suit. That's
in short, kind of. Yeah, I would say so. Like, I don't think we're going to see rate drops until at least like next year. Like, it's one of those things, it's a confidence game, right? It's like forward guidance. These guys got to look like they're, trying to fix inflation, right? And
good.
Like, it's one of those things where like, if you and I, because we're in real estate, and even Darryl's in real estate, we follow this stuff, right? And a lot of people follow what we talk about, but there's nobody who is working a job and they're having a hard time with like the high food prices and the oil prices and gas prices. They'll be like, oh, hey, I'm going to study economics, understand what the hell is happening, right? Like, it just, you don't do it, right? So they look at, the pandering of politicians. They're like, hey, we're fighting inflation. Do you see this GDP growth or decline, right? They're just like, we're trying. But when you're, increasing 50 basis points to fight 6% inflation, it's like, putting out a forest fire with a garden hose. Like, it looks like you're doing something, but let's be real, it's not doing anything.
Yeah.
So that's kind of like my philosophy on it right now.
Yeah, it's like a weather person trying to not only predict the weather, but control the weather too. Like, you got a bunch of economists who really don't know what they're doing, who are running the country, basically, like their fiscal policy. Like, how many economists get things right enough that they should be in complete control of the country's financing? Like, these guys, it's like a bunch of idiots are running the show here. They have no idea what they're doing. It's a bunch of opinions. Everybody's using different models. Everybody's using different baskets of goods. And most of the population is like, okay, yeah, that's okay.
I saw this sign. This reminds me, I saw this picture on social media this week where it says, I think it was in like England, it was a football club. And they were saying like, the perfect player exists. He knows all the plays that the opponents are going to do. He knows all the moves. He knows when to shoot, who to pass it to, and all that kind of stuff. But we can never convince him to put down his chips and his Coke and come down from the stands to do it. Right. And that was funny because it's exactly how it is everybody's out there right now. It's like, no, the Bank of Canada's got to go here and we've got to go here and you got to follow this. But reality is we don't know what it's like to be in that position, to have that major decision. What I found the big disconnect was in that article where it says, oh, we got it wrong, right? Like they admitted that they had got it wrong. They were like, oh, well, we didn't know that housing prices were going. Like, they need to be in the market doing things like a normal person in order to understand. Like, we are on the ground level. I'm trying to find some articles about Durham region because I got to go see someone this week and the market's tanking there. And it's really hard to find that local knowledge. But, I know it's happening, and any agent on YouTube knows it's happening, and any buyer out there or seller out there knows it's happening, but the mainstream doesn't. The Bank of Canada definitely doesn't. And that's the disconnect is the boots on the ground is just months away from the people making the decision.
Yeah, they're always very late to kind of like policy changes. like I think there's enough kind of talk about what's happening right now, at least in the real estate industry, that we're like, well, the Bank of Canada is going to take, credit for slowing down the real estate market. When in fact, if you're actually, like trading real estate, you would have sensed some kind of slowdown in like the 3rd or 4th week in February, right? Like I remember there's a listing we had. I'm like, oh, look, there's like 1 listing in this area every month. And then all of a sudden next week, there was like 10. I was like, what the hell just happened, right?
Yeah.
So like anyone who's kind of trading can see it. And when my whole goal is always to try to mix the kind of like micro, like what I'm seeing right now, plus the macro, like what I study, and kind of just provide it as data and allow people to have some critical thinking. Because let's be real, right? Like, I mean, the critical thinking is a very missing skill in our world right now. Everyone just reads headlines and like takes it verbatim. So like I have people come up to me and they're like, Zhen, the real estate market's going to crash 20%. I'm like, look at the article I read on Twitter. I'm like, yeah, but did you read the article, at the bottom of it, like where they say maybe, or it's kind of like the CMHC trying to pull a rug under us, right? They're like, oh, hey, like the last outlook they put out, they're like, well, the prices are at A right now. Tomorrow it could be A-1 or A+1. And then the next year it could be A+1 or sorry, +2 or -2. And I was like, what is the point of this then? Like, but then the headline says prices are going to fall 10%. I'm like, right.
So when you said read the bottom, I thought you were going to say, published by, John Smith, recently graduated with a BA from Toronto Metropolitan University, last week. Right?
No, but you know what? No, that's so funny that you say that. Here, check this out, because this is interesting. And okay, so we have 63% of Canadian non-owners have given up on ever buying a home. Okay. Look at the guy who wrote the article. He's like 18 years old. Okay. Now tell me, who's this guy talking to about this? Are they are they all just broke young people that he knows? Is it a real poll? Like, there's so much bias in the market right now. There's so many opinions. There's no regulation on any of this. How is, like, we as professionals in the real estate market, like, there's a pulse, right? We feel what's going on day to day in Toronto, but like Canada as a whole, people in Saskatchewan and in Manitoba, they should be worried about these rate hikes and all of this stuff going on, because there's 2 cities that need to be cooled in Canada, right? The whole country doesn't need these rate hikes. We're not in an economy that's going so crazy that they need to cool it from east to west. So when you attack like symptoms in just 2 parts of the entire country, like what is everybody else going to be dealing with?
Yeah, and that's actually a really good question that it's very hard to explain to a lot of people. Like, everyone thinks interest rates are mainly the driver of real estate, and when all they care about is real estate, but they don't understand there's a lot of like corporate debt out there too, right? So when you raise interest rates, it affects the people who don't have assets the most trying to get in. They get hurt the most. Kind of like you're a builder, right? So when rates go up, like your cost increases massively. And then when you also look at the way that, you take your materials for a building, when our rates go up, then our cost actually goes up along with it too, right? So like everyone's too concerned about this whole like symptom, but then they don't look at the underlying problem, which is just, I mean, for lack of a better term, we have a bunch of idiots, running the asylum right now. But if you really think about it, the problem is the money. There's too much money that's being kind of fabricated to buy things, right? And I try to explain this to a lot of people, like everyone who's trying to buy something, like, do you know where the money comes from when you go get a mortgage? Like when I grew up, it was like, like the Bugs Bunny show, you open the little vault at the back and there's like a bunch of cash, and people think that's where money comes from when you get a mortgage, but it just gets created out of thin air, like bam, and it goes into the lawyer's account for the seller. Like money is just constantly created out of thin air through like fractional reserve lending, right? So it's one of those things where when you try to explain to people and kind of have them think critically, they're like, I understand it, but at the same time, I'm just trying to buy a house and you're talking way too much about the money problem, and I don't understand why that prices are going up. So when you like peel back the onion layers, like you can get the answer, but no one's going to listen to kind of understand and try to give you the right answer because it's too complicated. No one has enough time for it. The attention span is too short.
It's too complicated.
And you know what? Hear it. That's
and
the
they
answer.
don't want to hear it. No, but it's made confusing so people avoid hearing it because they don't know. If you peel back the layers, like what we're doing, there's nothing so complicated. If you eliminate all the legal mumbo jumbo from all this crap, it's very easy. It's like trading a cow for another cow or a cow for a bale of whatever. Like it's just another transaction. It's no trickier than buying a piece of gum, but they've made it so tricky so that, I don't know, people have reasons for being, I guess. Like
Politicians don't recognize it.
Well,
That's
I mean,
why.
how could they recognize it? They're the
They don't.
problem.
They
They're
don't
the-
understand it, so they can't regulate it. Right? The banks are smart.
but
Right?
they even just think about this very simple way, like why it needs to be so complicated. Right? I agree with Darryl. Like, do we really need to call it quantitative easing? Like, what the hell is that if you don't
does that
understand
mean?
what it is?
Yeah.
Like, could
even
just
if you
say, like,
understand what it is, like
exactly, right? So I think it's made to look that way for a reason, right? Like the smart people we need to sound like they're
Accelerated
smart.
bond buying.
People
That would be
wanna
better.
sound so smart now. That's what I was actually just saying to a couple people this week. Is like, why? Just tell me what you're trying to say. Like, why do you got to say all these words that make you? I don't understand. I'm not smart enough to understand you. Just tell me what you're saying. But people need to like really justify existence right now.
Oh,
I'm
yeah,
not
for sure.
kidding. They have to
So
justify.
let's talk quickly, just quickly more about this recession before we go down this other road here. So, as defined, Zen, 2 consecutive quarters of a negative growth in a GDP, in a country's GDP. Canada now is doing fantastic.
Yeah,
Our
like-
GDP is growing, and
How do you know that's not doing well
I'm
right
stuck.
now?
I'm going to actually question that GDP growth. So
Okay.
much of it is backed by real estate, including residential investment. If we tank, it's going to be really bad. And then when we're measuring this on an inflation level, they are just putting used cars data into this. So I don't know where it's going to go, right?
Worse, up, bad.
But it's one of those things where, like, you know, when we had a price increase and they were like, oh, look, it's only 1 or 2%. People don't realize growth is an acceleration. It's the second derivative, right? So it's acceleration. So even if it's like 1% inflation or 2% inflation, we're not going backwards where, you know, a carton of eggs is becoming less than $5 anymore, right? So it's just 1% from $5. It's not like it's going to go backwards. So when we measure year over year inflation, it's going to look great because we peaked probably already at the end of Q2 because it started escalating last year. So then they're going to be like, look, inflation looks like we fixed it with higher interest rates. And that's kind of what I question. I'm like, is the GDP really going to be that good, or is it just?
Well, let's look. Just look.
Well, who do you know
anecdotally.
that's not doing well right now,
Exactly.
other than realtors? Like
What business right now?
everybody.
Like for me to say we're in a recession, like for me to say we're heading into a recession, the signs are there. Okay, I'll give you an example. How are the restaurant businesses doing?
Booming.
How are they doing?
Great for now. Great for now. I think they're trying to.
I went to a restaurant client's house that I was helping them with a condo, and I went to their house. They're putting in a pool. The owner's not working at the restaurant anymore. She gets to stay home while the staff takes care of everything. And they were shut down for a long time. They were shut down. Like they were part of the group, right? That they were shut down. And they said, when I asked them about the business, they said customers have been very supportive, right? Which means that they're all coming back in droves.
And
They
willing to
benefited
pay
from
the
government
new
programs.
prices.
In order for this recession to happen, there has to be some sort of tightening. Like people have to say, oh my gosh, I don't want to spend anymore. I don't want to take my money out of my pocket and go
Oh.
put it into the pockets of other businesses. We're not seeing that.
No,
seeing
but what we're
we
seeing
will.
is
proposals
that-
for office towers downtown, left, right, and center for new business space.
But if
No.
inflation comes in, and let's just say you're a regular person, you know, they got a mortgage recently, they're on variable, they're going to lose a few $100 a month, right? And that may hurt them. But at the same time, like, I know the finances of my clients very well. There's some like really high earners out there where like inflation doesn't even like, you know, affect them at all, right? It's the people who spend a lot of money on food and gas, like a proportion of their income. I think they get affected, but it's kind of that wealth gap that happened during the pandemic, right? It's the people with assets have seen like a giant windfall in terms of their net worth, and the people who don't have assets are basically being turned into low income earners at this point because they don't have it.
Yes, I mean savings rates are still up. Again, I'm trying to use as much real life evidence because you're right. The data points are all highly unreliable. But people with those type of situations, gas costs and everything. I was talking to somebody last night too. You know, working from home has given people a huge amount of expendable cash at the end of the month. Like they can afford the 30 or 40% increase in gas because they're not driving as much, or maybe one partner is and the other partner isn't, right?
Yeah, but you have to think
Food
about how
costs.
many people are working from home.
Yeah,
Right.
it's a
Like
small
I think,
segment.
yeah, it's a small
It's
segment.
still
Like,
I
major.
think the
It's still
real
major.
looming problem right now, because people are spending money, people have money, there's enough jobs out there for anybody that wants one. It's when 25% of that GDP slows down,
Yeah.
right? It's when this whole goddamn market slows down, which we're seeing. There's no doubt about it. Like we're seeing it.
Mhm.
As this big, gigantic segment of the GDP starts to slow down, it starts to bring other segments that are not considered part of it down, that
Exactly.
are a derivative of it, right? So all these things that feed off the real estate market that are included in the rest of GDP start to slow as this gigantic boulder starts having a million people putting stops and things in front of it to slow it down. And that's when we're going to see the recession here. Right
Yeah, I
now,
agree.
yeah, like every business owner, I think, I mean, furniture market seems to be doing good. Fancy garages, windows, like everybody I know, in retail or in restaurants or in construction, cannot find enough people to keep up. And if anything, they're losing margin because they're hiring people at a higher rate, which is a whole other story that we can get into. But how do you see a recession when the market, like when everything else is booming? It's by destroying that gigantic segment that we
Yeah,
all rely on.
always it's going to be the reverse wealth effect that's going to happen, right? Like everyone feels rich when they think their house has gone up in value, right? But in reality it's just paper gains. But the psychology of paper gains makes you go spend more money, right? That's why there's a record amount of refinances and HELOC. That's why interest rate plays a big role in all of this. But if you start seeing your neighbor's house sell for less, and then while your interest rates gone up, your servicing has gone up, you tighten it a little bit, you're like, well, maybe I don't need that extra 2 meals out there in downtown Toronto with bottles of wine, right? Then that stuff starts slowing down. And that it's like Dalio's thing, right? Like someone's income, another person's income is another person's spending, right? So when the kind of cycle stops, then what happens is now we're going to slowly come to a grinding halt. Then that's when I think, and it's going to take some time, right? But the policymakers will be like, oh crap, we're coming into a recession. That's when they have to drop rates. And I actually think they're smarter than most people would give them credit for. Like, I actually think they know this is coming, this everything bubble. And they're just like, well, I just got to jack up the rate so I can drop it back down when this everything bubble blows. Actually, I think
the timing on the rate increases is appropriate.
Yeah, like they got a pandemic made from 1.75% down to quarter point, right? I think they're going to try to bring it back to 2 or 3 so that when the next thing blows, it's going to come down. Like, because we're in so much debt, like the amount of debt to GDP worldwide is like ridiculous. So they need the cycles of boom and bust just keep getting shorter and shorter and shorter. I think that's what's happening.
So that's
It's going to be 3 months this time.
That's a
the bus is going to be 3
segment.
months, and things are going to be back into the full swing of it.
Well, so early data shows GTA housing prices on rapid decline in April. Rapid decline.
From what though? Rapid decline from what?
Well, you know what? I don't think it even matters. It's
January and February where the prices didn't make any sense.
No, but I mean, it's the fact that it's considered a rapid decline, and it probably is. I mean, look, we showed earlier a 13% decline in what was it, townhouses or something like that. 13% in townhomes between February and April, which is a significant decline. But I think it's more the speed in which things will decline and then improve again. So, for example, back in 2009, the market completely paused. Right. And I've said it a bunch of times on the show. For those of us that had to sell during that time period, it was carnage. Right.
Oh, yeah.
But for everybody else who was like, I don't even care to sell. I don't even think about real estate every day. Like, they didn't know anything happened because 9-10 months later, the prices were back and even past. So I think, to speak to your point, like, this is what the market's more liquid. There's tons of people with cash on the sidelines. There's a billion pissed off people sitting on the sideline that couldn't buy during the frenzy of the last year and a half. So how long lived will the correction be?
Do you guys want to hear something actually kind of interesting from my side? Because I work with a lot of investors, right? There's a lot more people calling me right now. They're like, Zhen, is it time to pull the trigger? I'm like, not yet.
Not
right?
yet.
Want to buy or sell?
To buy.
Investor.
Right? So I'm telling them like, not yet. And here's kind of my philosophy.
How do you know when yet is?
Exactly. And this is what I say. I don't know yet. But
But not now, for sure.
Like when my spider senses tingle, I'll let people know.
Okay.
Like what am I kind of thinking right now? Because I don't do that much kind of like residential buy up and sell, right? Like I would say 80% of my clients are investor based. And the other
what percent? 80?
Yeah, like 80. So like 20% of my clients are like, we just want to work through to buy the primary, right? Which is fine. But what I'm seeing is the detached segment, unless you have to sell, it's not really coming down too much, right? But it's the town and the semis. And my thought process is this: if you, as a person in say last 4 months, owned a semi and detached, you're like, whoa, I bought this for 600,000. It's not worth 1.2. I can easily buy the detached over there. I'll buy it and then I'll sell my town. And then because everyone's like, oh, you got to buy first because in this market, it's harder to buy than to sell. And when the market turns so quickly, you got the guys in the middle with the semis and the towns. They bought something for like, call it 2 mil. And now they think their town was worth 1.3. And now the market has turned. They're underappraising 100 and then their town is selling less than 100. So now they're out of water 200 grand. And those are the guys who have to sell. So you're going to take a major, major haircut because you understand the litigation and like people could sue you for damages after you deposit. Then they're like, oh crap, I got to take this crappy deal. That's why I think the towns and the semis are coming down much faster than the detaches. Because if you're in the detached, you're kind of in the final house already, right? Why would you need to sell unless you have to?
Well, so I'll tell you a funny story. You want to hear? I should have started off the show with this. My father-in-law is in the situation right now. Okay.
Oh, that sucks, man.
He bought a condo 5 months ago. And then he sold his house top of market, but he gave them a long closing. It still hasn't closed. And so what happens? We'd like to renegotiate our contract. We're not so interested in buying the house anymore. They're firm. They've been firm for like 2 months, right? And so what's happening now? Well, my father-in-law has a bridge loan between the condo and the house, right? He bought a lot of inventory lately in the furniture business. So he's cash broke in the business. He didn't get enough of a bridge that he needed initially. And now they're talking about backing out of the deal. So look, he's not a broke individual by any means, but at the moment he's in a cash crunch. So even if you're not broke and you need to sell, like you can run into these situations as a business owner and a real estate owner that you couldn't even have foreseen ever in your lifetime, right? So now it's like they want him to fix this and they want him to do this and they want him to drop the price and they want this and they want that. And he's like, he could let them walk and rent the damn place, but he doesn't get like all that money he needs out of the one place. Yeah. What a horrible situation to be in. And look, he's older. He'll navigate through this no problem. What about those younger kids or younger people in their 20s that think they hit the jackpot on their townhouse in the last couple of years that you're talking about? They're fucked. Or their parents are fucked because now the parents have to come up with probably another 200 grand on top of the help they were giving already and a bigger cosign, right?
Yeah. And I warned a lot of people about this when I was working, but you just got to watch out because I saw this stuff happen in 2017, especially like a lot of people come to me because when you have like a little bit of presence, people want some confirmation bias from you that they made a right decision, right? It's never like, hey, Zhen, we want to use you for your services. But like, hey, I bought this, was a good idea. And I try to be nice. I'm like, I don't think it was a good idea to buy any of this stuff because if you don't kind of analyze your own situation and you don't mitigate your risk, it's gonna suck, especially if you're kind of like all in on one thing, right? So where every dollar is going to affect you and you don't have ability to cap the downside and you can't ride this out for a long time, you're screwed. And there's a lot of these stories that I think are going to come out like that happened in 2017. And then there's going to be like a pity story. Like, do you remember Mad at Me when they're selling the Whitby homes and everyone banded together saying that they're like, oh, we can't afford all of this anymore. We're all
because the price dropped on the next phase.
2017.
Right?
Yeah.
The next phase came out cheaper and everybody that bought previous went bananas.
And Mad at Me said,
Yeah.
Here's your closing date.
Yeah. And
I'll gladly resell your unit.
yeah. And then if they don't get the price, they sue you for the damages. Right. So like we're going to see a lot more of these stories, especially anyone who wanted a bought a pre-con detached or like a single family home. Like that stuff builds fast, right? You are going to underappraise if it closes this year. And if you can't sell your home for what you thought it was worth in like February, like I saw so much of that in the York region.
But are the builders even going to build your house? Like maybe collectively together, the builder will hold off and the homeowner will be like, no problem.
Oh, they'll have their financing in place. They'll build it.
Yeah.
They'll say, here, it's ready.
I don't know. Listen, it moves so fast. Prices, like lumber shot up like 150% in 3 days. Like all of a sudden it can be not viable because concrete prices all of a sudden destroy the entire project.
It is true.
I know for a fact, just from my other business, that people are holding off on launches right now.
Oh, I 100% will if I was a builder too, because like there's too much unknowns, right? Like the market's soft. People aren't buying things. Your, cost and materials and labor is like a big question mark. You got that strike that's looming next week, right? It's going to be disgusting.
Yeah, you got the strike looming and you got development charges You just took it in the.
Isn't that crazy? That proposal, isn't it?
That's
unreal.
Ridiculous.
Forget proposal. It's going through.
I'm not surprised.
They always
I'm not surprised.
Well, like it happens every year. They raise them. This was a big one though.
Yeah, this one's
11%.
No, it was 49, wasn't it?
Maybe.
Yeah, I think it was 49.
I have 11 in my head. I don't know why.
It's a big jump. It's a big jump.
Even 11 is crazy.
Detached are going from like 85 to 140 or something like that. That's a big jump.
Well, I'm not surprised because like I saw this in 2018. Like we used to do a lot of pre-cons because the number makes sense. But then like overnight, I remember one project going from like $1,000 a foot in entertainment district to 1,200 because they jacked the development charges by 38. And I just feel bad for all the people who don't have capped development charges. I'm like, oh boy, you guys are.
I don't even remember this cap development charge baloney being in the contracts a few years ago. Like there was no talk about that. And all of a sudden it's like, we're going to do you a favor. We're going to cap them at this. It's all recovery.
You had to ask for it.
They paid for it before. This is like in the last, I don't know, 5, 6, 7 years, all of a sudden they're being nice guys. As the parking goes from like 10 grand to 25 grand, we'll cap your development charges that you have to pay on closing. What does this even mean? Nobody even knows what it means, half the people.
But you know what? Like a lot of people poo-poo on the builders, right? But I've seen the performance from some of my friends and clients, and I'm just like, the margins are not that great.
No, they're and really if that's the one you're seeing
for a builder.
But if that's the one that you're seeing, it's not the internal one. Imagine what the real performa looks like.
It's really bad. Like I feel bad for some of these builders, and I understand why like they wouldn't want to build. Like unless you've held a piece of land in Toronto for like a decade, like the cost of acquisition and the build is just ridiculous. You don't
get financing. That really what it boils down to is, can we get the lenders to back this project? And the lenders are looking for a certain profit margin, right?
Yeah.
Who was the guest that we had on, Darryl, that was telling us about the built-in profit margin? Anyways, doesn't matter who it was.
Like 7.
But it was about a 30% profit margin for the lenders to actually even sign
20.
off on it.
Yeah, 20.
Right, because they know it could drop down to 10 real quick, right? If the market changes, right? Now let's just talk about, because this is a hot topic. We're getting the commenters in their basement of their parents' house telling us that the market's going down. I'm in the Toronto housing bubble Facebook group or something like that. I joined it about a month ago because I wanted to see, and at the time there was one post a day, and now there's 30 from all the geniuses. So I need to know, what does it look like, Zhen, when a market, because right now we're in a correction, absolutely, but a crash. What has to happen for a crash? What does that look like in Canada?
Variable rates and fixed rates go past 4%. And then we break the stress tests and we make the stress test way higher. So no one can even afford what they afforded like 6 months ago.
Okay. So hold on, but what's a crash? Forget about that.
Why wouldn't people just hold on to their houses then?
But here's what I think is going to happen. Like if rates get up that high, right? And like the 5-year fix is already there, right? Like you're being stress tested higher than the posted rate of 5.25. So when variable gets there, then no one's going to be able to afford the whole 5 times your gross income anymore. It's going to be like 4.5 or something, right? Then people came and buy. Yeah, there's banks that circumvent it, whatever,
right?
But like that's
times when I was younger, it was 3 times. Okay, yeah.
No, it's your gross income. No, it was 8 before the stress test. But like once that kind of gets there and people freeze, it's gonna kind of cause a crash, which is like prices drop more than 20%. But I
More
think
than
that
20.
maybe,
Okay.
yeah, I think that's going to be where the trigger is for, the policymakers to come in and be like, oh, it's time to drop the rates.
You think that
Drop
they're
the
going to
rates again
be
once they see the market's not doing as well.
So
Yeah.
we're giving them credit to actually have enough foresight to know what's coming next, and then we're going to say that they were late doing what they were supposed to do.
But hang on. Let me clarify. I'm giving them credit that I think they know what they're doing. Are they going to act fast enough after they see the crash? Probably not.
No.
So like I think
if we put 40% more of the money supply into the markets, it will cause a problem or anything at all.
But this is common. I've heard this. A lot of people are saying this, that rates are going up
bunch of
right now
assholes.
and they're going to come right back down, not maybe to zero again, but close to 1% or something like that, a reasonable amount in order to stimulate the economy when things change. Let's just talk quickly about what my comment here. So the Toronto housing bubble Facebook group, right? Everybody's cheering for the doom and gloom. What happens when the market does that? So first of all, yes, Zhen, you're right. Interest rates would have to be getting to a point that people can no longer afford the homes at the prices that we've seen in the past few years. But it also means that sellers are forced to sell, because there'll be some death and divorce and people leaving the country and all that kind of stuff. But for the most part, people will hang on to their properties if they aren't going to get a significantly decent number close to where they are today. So that means you're talking about mass bankruptcies. People have to sell, right? Because there's only so many people who are dying and divorcing and all that stuff. So mass bankruptcies. You're talking about power sales, right? You're talking about businesses shutting down. You're talking about mass unemployment. You're talking about a very difficult time like we had in 2008 in the States in order for the market in Canada to drop. For it to drop 50%, that means it would need to double again in order to get back to where it is today. That's not happening. There's no charts out there
as
or
that's
information
happening,
out there
though,
that shows that we're in a bad enough position for that to happen in Canada at all.
I don't think it's going to get that bad, right? Like this is what I always try to explain to people. There's fundamentals that you got to look at in Toronto, but then there's the micro and the macro. The micro are policy changes, interest rates, and government stuff that comes in with banning foreign buyers, right? That stuff is all short term, right? But the long-term horizon is we have a ridiculous amount of immigration. People actually want to move to Toronto, right? And people want to live here. Not even Toronto, let's just say Canada. Everyone always thinks that we're the shit in Toronto. But in reality, when you look kind of at all the things that's happening outside of Toronto, if you go back to China, where I'm from, Toronto, even Canada, it just looks like a god's like heaven, right? It just looks like heaven to them. So it's not that we locally here think that things are going to crash. It's no matter how much of a crash there is, if they keep letting immigration in at this record-breaking pace, there's always going to be someone left getting the next place. And people are saying, oh, all these immigrants are coming. They don't want to be here. They can't afford all these things. But the immigrants I see that are coming here, they're coming in bags of cash, right? I'm not even talking
Louis
money
Vuitton,
bags
of cash.
sorry, Bitcoin.
Bitcoin.
But they're coming in with money to buy these things, right? So it's not that the short-term things are going to cause volatility. You should have to expect that. But the long-term in 5-10 year, when you have good job prospects, immigration, and you really don't have that much land realistically in Toronto because of the green belt and the lake, it is kind of like a safe haven for real estate prices, right? If you can ride up the short-term volatility, you're fine, right? We had a house in 2017 in York region, right? It came down a ton of money, right? And they were like, okay, whatever, we don't care. The tenants are paying for it. And then now I look back and I bought it. I'm like, oh, did I regret buying it? No, because I look like a genius for holding it from 2017 to 2018. But at the time when I bought it, I was like, oh my God, I'm going to lose my shirt, right? And that's what I try to explain to people. Just don't focus so much with real estate short term, trying to flip stocks or something. You really need to have a long-term horizon, 5-10 year plus. And if you don't plan for the 5-10 year plus and you only at the short term, yeah, you're going to get burned. That's it. It comes to that.
So with everything that the three of us see, and we're not alone, and everything that we've discussed so far today, why is the market slowing down? I have a theory.
Slowing down from what?
No, but listen, there's not anybody talking about it not slowing down. There's people
Well,
that
we're in
are
a strong
hanging
seller's
on.
market right now.
but
You can still sell your home. It's a good
There's
market.
there's no
it's-
doubt about that. There's no doubt about that. But the overall feeling in the market right now is that it's slowing and that there's something happening and we're heading downwards, right? There is nobody out there anymore that with 100% certainty is like, this thing is still going up, man. Right?
I've seen record prices this week, by the way, in some properties, especially in
Yeah.
Toronto, not in the 905. But
So-
in Toronto.
but we've also seen reports that show Durham is down 50% and Whitby is down 69% and Bancroft is down 93%. And right, like we've all
those
seen
are made up
these.
stats, but yes.
So is the media and social media being used by the government and the Bank of Canada? Because we obviously see sentiment trumps all, right? Sentiment is the only thing that has shifted this market. So
sentiment trumps all in short term.
Short term, 100%. Yeah, you can only hold down like a ball in water for so long, right? But is the media being used as a tool against all of us to freak us out because this confusion is softening the market right now? Because it's not the 1.5
Used
points.
by who though? Like, I think the
By the
media
Bank
is
of Canada.
using the media is using the news and the sentiment and the fear to get
Double
their
reverse
articles
cycle.
clicked on a little bit more than they normally would. That's all
Yeah,
it is.
exactly. I agree with TK. It's I wouldn't go so far into wearing a tin hat for conspiracy theories. It's more what is good for that person who's writing it, right?
Where's
Which
my
is
hat?
if the media, like negative news sells. I can tell you, like some of
We
the
know
best
it.
content. No, here, give
Look
me
at our thumbnails. They're
Look at
always
our
about to
thumbnails.
crash.
Exactly.
We
Like
know all about that.
My best YouTube videos are always negative, but the most useful tips for investors are always positive. But the most amount of views go to the negative. And then you always have all the trolls. It's great for algorithm, fantastic, right? But it's the positive stuff that doesn't sell, right? I remember I had a mentor once who told me like, CNN always has bad news. They're going to put the GNN, the Good News Network, right? That's
one
not
will
going
watch
to
it.
Doesn't
work.
exist.
It'll be as good
Exactly.
as CNN Plus.
Right? So like, if you understand like these media people, right? Like websites, coverage, they make money on ads.
Better dwelling.
Right? Like they make money
Got
on
banned.
ads.
He blocked me.
Who's better dwelling?
These better dwelling guys, all they want to do is just like nonstop negative news. They've been bears in every market since their creation, including the markets where things were going crazy.
You can take any stat and make an article that goes whichever way you want it to go, right? So now it's like
100%.
the market's 30% down. And then you read that it's like the sales are down 30%. That's a giant difference. When I'm reading an article and I read the market's down 30%, I don't think sales, like the amount of sales, I'm thinking, oh shit, the prices are crashing, right?
Yeah, that's deliberate. That's obviously deliberate, right? That's why when I say it, I'm very purposeful in the way I put things out there. But
we're all doing it.
Well,
maybe not you, but everybody other than you.
No, my thumbnails are totally doing it. I'm guilty of it too, right? I'll admit it.
We know.
But it's one of those things where it's like if you don't actually have critical thinking, right, then you are basically, call it lack of a better term, a plebe who just follows headlines, right? And anyone who does that and doesn't have critical thinking, they're like the last ones to jump in. They're the ones to, hold the bag, right? That's what I was saying. Like a lot of the smart people are right now just keep asking me like, is it time to buy something, right? Because if your long-term horizon is to hold the property for 10 plus years and you can buy something that breaks even from rental, right? Like cash flow positive, then who cares if it's $1, $10 or $10 million?
Yeah.
I tell them all the time.
They're sitting there with bags of cash, just waiting for someone to tell them it's not stupid right now, right? They're just, if you would tell these guys go for it, would they do it?
Yeah, some of them would. Like I had a handful of clients, I think in June during the pandemic, I was like, okay, I think I'm starting to see a rebound, right? I'm like, I think it's time to jump in now, right? And I put it out there for maybe like 10, 15 clients or so. 2 of them took me up my offer. They bought it. And like one of them bought a legal annex duplex for $1.3 million
Amazing.
at the time. Yeah, right. Think about what that's worth right now. That we went to reappraise it, right?
2 million.
Yeah. So it's like he's laughing right now, and he's like, ha 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 ha, right? But who has the courage to buy when the sentiment is going against the grain, right?
Yeah.
And that's kind of why
Warren Buffett.
Yeah,
Warren Buffett, that's what I was thinking.
Everyone quotes him, but no one does it, right?
No one does
like,
it.
I'm always trying to be contrarian, and like I'm lucky my wife kind of is a contrarian to me, and she's like, I think your idea is stupid, right? Because she looks at the risk. But you need someone
Darryl
to like
my wife
think
says
about
to
it.
us.
Seems pretty normal.
Yeah. Jeez.
That we're stupid.
With that
Ideas
coupled with our wives being contrarian to us and our opinions all day.
Yeah, so like you have to think about what's on the other side and what your exit options are, right? So like for me, it's always been for my clients or even myself, if you're holding the thing, it pays for itself. Who cares?
Why is there an exit?
Inflation is the main thing too. So we're coming to the end here. We got about 5 minutes. We want to get some sort of forecast and all that kind of stuff. As long as inflation is high, really it doesn't say the price of real estate is going up. It says that the value of the dollar is going down.
Nailed
so
it.
It means that no matter what everybody thinks, prices are correcting, prices are changing, all that kind of stuff. You cannot buy tomorrow's properties with yesterday's dollars. You got to look at what you're dealing with. You're dealing with a dollar today that's worth less than ever before. So it means even if it doesn't seem like you're getting as much of a cash flow situation for investors or, value for your dollar based on your wages and your income and to the property that you're buying, it's not going to go back to 2019, 18, 17, whatever date you want to come up with in your head. It's not going to go back to that because you've got to use today's dollars to buy that property and they're not worth as much anymore.
And there's more buyers than ever.
Yeah. Well, I mean, it's the immigration problem, right? And also people chasing yield. No one talked about inflation years ago, right? It was like 2%. But now all of a sudden, everyone's talking about inflation. And the more people come to me about inflation as an inflation hedge to look at real estate, I'm like, well, it's going into public sentiment right now that the value is worth nothing. Like we always knew that, right? Like 2% inflation was not a real thing. Let's be real, right? They were still doing a lot of quantitative easing prior to pre-pandemic. It's just a pandemic.
Neither is 6.7.
It's all about wage increases, pension, all that kind of stuff. They have to keep it, in line. Yeah. Otherwise, they have to justify rent increases, right? The prescribed amount from landlord tenant board, right? All that stuff, right?
So one other interesting thing that I think might speak to you, because you're obviously much younger than I am. The millennial generation has just surpassed the boomers in size in this country. And that has to have an effect on the market, doesn't it? You also mentioned Bitcoin, which I'd love for you to touch on for a couple seconds. Millennials and Bitcoin and real estate moving forward. Go!
I think the millennials understand that cash is not something good to do because like millennials, I think, are the smartest, most educated out there. And I'm not saying this because I am a millennial. I'm just saying just general consensus.
You're all cyborgs from birth.
Yeah, exactly. We grew up with iPads, right? Yep. And some of them don't remember the 56K days, but yeah. So like when you have people who don't understand, people who understand that inflation is bad, where to put your money, and there's a lot more people going to cryptocurrency. But at the same time, these people are also needing a home to buy. You're going to have a huge rush of people trying to buy stuff with different asset classes and different allocations, right? So I think in the next maybe 5-10 years, when kind of like the boomers are going and the millennials are buying, there's going to be a giant wealth transfer. And where that wealth gets transferred to is probably going to be outside of bonds. It's going to be either to hard assets like real estate, or it's going to go into digital currencies. I think that's where it's going to go.
So
very possible. Absolutely.
Into
Darryl
digital
and I
currencies now.
Buying much with our digital currency.
Not with ours.
Well,
I sold all my Shiba Inu. Now it's great.
There's actually people who are letting you get a mortgage when you stake your Bitcoin now.
Yeah, we had somebody on the show a few months ago.
It was great.
Yeah. So like, I think it's happening faster than you want, and that technology should disrupt the industry. But the problem is like we got way too many gatekeepers, like especially ones who govern our board. They're going to prevent us as much as possible, right? Like the analogy is like how they're trying to trap sold data for like 10 years, right? Yeah. So there's going to be like bureaucracy that's going to slow down all this innovation. But at some point, innovation, because it makes more sense for people. Like if you can buy something by clicking a button, like our profession is going to be out of business, right? Which is fine. It's going to happen at some point, right? You just got to accept
it's going to happen soon.
Yeah, it's going to happen.
Tell you. It's going to happen soon.
People working on the software to do it in his basement.
But like, there's going to be people who are trying to like protect their bag, right? Like, not allow for this to happen. It's always kind of like, you know, people say realtors always pumping up the market because, you know, if the market's not pumped up, they make no money. And there's like a bit of truth to that, right? Like there's a lot of realtors out there who have never seen a slowing down market. So there's going to be a lot of pushback in terms of where things are going to be. But I think innovation and technology should ultimately make things easier, and it should be deflationary. But really, it's not right now because of policymakers.
Yeah, so maybe what we'll see, or what we've already started to see, is this group of people that have no hope of buying a house right now, who put their money into other assets like Bitcoin or Ethereum, have made a lot of money over there, are going to start transferring it back into the real estate market, as there's easier ways for them to do that, where they don't lose so much money going back and forth with the currency.
Oh yeah,
I think you're on to something. I think you're on to something.
Well, you know, back in 2017, 2018, when I think China clamped down on the money that could come in, right? It was like,
yeah, good job, guys.
No
more money came in since then.
I knew some people that were moving stuff, like they would buy Bitcoin and sell at a loss for Canadian dollars.
Right. Oh yeah, people could do that a while ago.
Yeah, exactly. So like there's a lot of stuff that's happening. It's just money will go. It's like water. Like you can put all the rocks up in front of it. It's still going to end up at the lake. Right. It's just going to flow.
Finds a way. Well, that was a great conversation. Thank you so much.
Yeah, Zhen, we definitely want to have you back on in the future if you agree, and that's okay with you.
Yeah, for sure.
I know that our viewers and listeners are going to be really happy to hear this podcast. A lot of really good content. A lot of points that are all relevant. These are the hot topics of conversation. They're a little controversial, but at the end of the day, nobody knows exactly what's going to happen, right? And everyone's got their theories. Everyone wants to be right, but critical thinking. I think this is going to be the topic au jour with our podcast today, is critical thinking. If you're going to make a decision, if you're going to buy, if you're going to sell, know the facts. Watch Zhen's channel. Like, he's got so much information on there. You can really get educated.
Look at that hair.
You're not just trusting your realtor to make, or your neighbor to make the decisions for you. You're getting actual advice. You're actually learning the stuff. And Prime Properties TO, the website. He's got a brokerage. Your brokerage is your Remax brokerage.
Yeah. Darryl, I hate watching myself on that. It's so cringeworthy when you watch your old stuff. Or like,
let's keep it on for another few minutes then.
But definitely your YouTube channel, Prime Properties TO. It's awesome. And awesome. If our subscribers haven't subscribed to you, go ahead and do that right now. And of course, if someone hasn't hit the bell on our channel, hit that bell right now, because we appreciate everybody. And throw those comments up. We love the comments, good or bad. It's all good for the algorithm. Throw them up.
Like, can I leave just one last note for everybody?
Yes,
of course.
Like in the world we're in right now, you have to put your ego aside. And if you're wrong, you can be wrong. And the problem with all of this is, when you have new data that comes in, you have to be able to change your input. You can't just keep sticking to something, right? So like, you have all these economists saying a bear crash, 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 crash. Like, a broken clock is right twice a day. Right. So you have to actually like take new input and apply it to kind of your theory, and then your output changes. Like, who knew, there was going to be a war in Ukraine? Like, no one saw that coming. Or kind of like, if anyone saw it's like, oh, prices are going to go up in real estate when the pandemic hit. No, that's a lie. No one knew that, right? So you need to take current input and apply critical thinking so that you can get to where you go, instead of just, reading headlines. That's kind of what I read at.
That's how this show was really born originally, is like, nobody had a fucking clue what was going on at the start of the pandemic. We didn't know. All we're doing is talking to people trying to figure out, and we had not much else to do because nothing was happening. So we started this thing. What a wonderful conversation. Tons of insight. Thank you so much. Appreciate your time. It was great meeting you. Mr. TK, always a pleasure, sir.
We'll get you back on soon. Thanks, Sam.
Absolutely.
Enjoy your Sunday.
Thank you so much.
Take care, guys. See ya.
Adios.